Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Cinco de Mayo, May the 5th. The year's 2023. Let's talk trading. Trading with Walmal, bias versus no bias. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. I told Walmal today, said I realized something yesterday when I was looking at the charts, that one of the big differences between Walmal's, the way he trades and the way I trade, is I have a bias and he trades based on what the indicators tell him to do.
Yeah, yeah, and I think I've said something similar to that on a video before. Not the difference between you and I, but just the idea that you've asked me in the past, what's my bias, and my answer has usually been, I don't know. It's if I have a bias, maybe what the hour's doing, what the 30 minutes doing, it's a lot more current than, let's say, what is overall about to happen. Now I'm back in my mind, it's the type of thing where, I had said to you earlier, that I thought it was going to make a run back up to the 2600 after the news dropped today. And it got up to what, almost 93, something like that. So we made a pretty good attempt at getting back there. So, and I even, took a trade base off of that. But for the most part, I just don't, I really don't have that much of a bias. And the reason why is because I am a technical trader. I'm a statistical trader. And what that means is that I'm just going to go and say, I'm going to believe the indicators. I'm going to believe the statistics, and I'm going to trade based on that and that alone. And I think that, that's worked out well for me. And then on top of that, I'm not trying to make 20 pips. Now, I did have one trade today where I got 10 pips on it, but for the most part, I'm not trying to make, those type of pips. I'm trying to make 2 pips, 3 pips. That's what I'm trying to do. And in those situations, honestly, bias doesn't really matter that much. And the reason why bias doesn't matter as much, at least in my opinion, I may be totally wrong, maybe a total numbskull for even saying this, but, let's say my bias was for short, and I thought this thing was going back down to the 2500 level, okay? The reality is it doesn't go there in a straight line. Look at any 1 minute chart. It goes there in a zigzag fashion. So what I'm taking advantage of is the zags. The zigs on the way down and the zags on the way back up, where the market goes and compresses back together. And sometimes I'm taking advantage of the zigs, just again based on what what the indicators are telling me. And yeah, I mean, I could get mad, I guess, start thinking I got into a trade, and because it was a zig and not a zag, I got out with 2 pips or 3 pips, and and then the reality is that it goes and runs 15, 20 pips to wherever that long range where the market wants to go. But that's not how I trade. So that's my idea on bias. That's why I don't put as much credence into it, because I know, the bias there may be a true bias in the market to a particular direction, but I'm not trying to get that, I'm not trying to go on one trade and make 20, 30 pips on that one trade. I'm trying to get into multiple trades and picking up 2 or 3 pips.
Exactly, and that's the biggest thing. And I'm looking, to make a couple of pips, but I also want to sometimes, make a nice run, because I look at the chart, from yesterday, and I see, or I look at the chart from earlier in the current day, and I'll see, hey, there was a nice, 10 pip move to the downside, or a 20 pip move to the downside, especially, let me pull it up here, let me find it. When I'm looking at the sweet spots, we're separated every 10 pips. And then you look at the M30 ranges in this particular case, and you see they're over 10. It's like, should be able to make 5 pips. But as you know, we get in these trades sometime, and it's like we're struggling. And in fact, this is kind of funny, because Walmal and I, we were talking earlier before this call, and he said, oh, I just got out of that long. I go, what? He goes, yeah. I go, but you were in that like a long time ago. He goes, that 5 minutes. I go, yeah, but for you, that's forever. We don't like being in trades for more than, basically seconds, or a minute or
Yeah,
two. But to be in a
yeah.
trade for 5 minutes usually means we're struggling, as opposed to
Yeah,
we're riding, the wave.
yeah. I'm usually in a trade for somewhere between 30 seconds and 2 minutes. That's probably, if you were to go and do the analysis on my trades, that would probably be the mode that would come up. And the thing is, though, if you are looking for those 10, 15, 20 pippers, well, unless you're getting a news event or something like that, where like, earlier this hour or at the bottom of this hour where it dropped 40 pips in, 4 or 5 ticks,
Well, that was last
yeah,
hour on the NFP. Yeah.
yeah, yeah. So, it just doesn't happen. You'll get there if there's an old expression that's out there. It's sort of like, if you want to make the big pips, you got to be in the trade for time,
Right.
and there's some truth to that. You got to be in it for time, and I'm not willing to be in it for time. I'd rather just put it in my pocket and wait for the next opportunity to come along. Again, that's my personality, and it suits me well.
Yeah. Now price is going back up. It's kind of funny. If traders saw that these lines compressed down because we got a new three ball, and it's the fib lines from three ball to three ball. Um, so if you like to play the fib retraces, um, this is a one way to do it, and that's just off of the 3LZZ indicator that I have modified, um, you know, to the nth degree.
Right, and it's sort of talking about trades. If you would have gone, you could have gone long at 75 line.
Yeah.
If you think about it, it would have been a perfect, nice little trade. You could have picked up 5 pips on it, in 2 or 3 minutes. And the reason why it's a perfect trade is because 75 is a psychological number. You had a state change, okay, where we went from a inside bar to the next bar after that was a higher high bar. So there was another reason. You had a flip flop box because you had a down candle followed by an up candle. You had all these reasons to go and take that trade. Everything coincided. Go in, take the trade. I'd probably, be honest with you, I probably would have gotten about 3 or 4 pips on that. And the reason why is because there was a gap up, and I would have said, "Oh, gap up, it's probably going to want to go back down to fill," and I'd just jump out immediately. Just
Yeah.
because of that gap up.
Well, yeah, and the
You
other
know,
thing on that one particular trade that you mentioned, I'm thinking, I thought you were going to say you were going to probably jump out at about 78, because if you look to the left, there's a couple of one balls. It's like, well, price
yep,
rejected off of that a few times. And then if you look further left, you can see how price had, the last time it was on a downward move. But now we broke through that 78 level, and we're up. Well, we were up a couple of pips,
yep,
and now we're
yeah.
back
So it's
there.
and that's the thing, with this type of trading, you take it as you can, and you take your pips while you can, and the reality is that there's probably no, I mean, it may not happen, but there's almost no doubt that it's going to try to get back up to the 2600 level, and the reason why is you have that huge return bar. We know that they like to be filled, but that would be a bias, the topic of our video. That'd be a bias that's going to go back up there. Problem is, I don't know when it's going to go back up there. And it's the type of thing, I could have taken it down, I could have taken it up, I could have taken another down, taken another up, another down, another up, another down, another up. You made money all along the way. And in fact, because of that, we call that travel. How far does the market travel? And from where you originally would have gotten in, if you had a bias and you picked the perfect bottom, okay, and let's say it does get to 2600, okay, that's 37 pips that you could have picked up. Well, doing it the way I did it, you can pick up the same number of pips, if not more, because the travel distance is longer. And what I like about doing it that way is that I'm not taking a risk that it just doesn't pan out, because a lot of times when you take those type of trades based off of bias and a bias alone, the problem is you got to put your stop so far below you that you're not able to go and risk as much money as you're willing to risk on when you're only trying to pick up 2 or 3 pips.
Right.
But that's just my, again, somebody out there probably gonna say you're foolish for doing and thinking that way, but hey, it works for me, so that's what I'm gonna do.
Yeah, I've just been flipping through the charts showing the traders a few different things, but yeah, that M30 is definitely a return bar, so we're going to see if price can get back up there. And
We're at the midpoint of it right now.
Yeah, it's just busting through. We're past the midpoint.
Yep.
In fact, we went through R3 resistance on M30 at 25.83, and the next one is at 25.92, and that's the 3 ball on top resistance. So if you scrunch the chart, you can see those 3 balls that were breaking.
Yeah, so there was and the funny thing is, here we are today, and we only got 77 pips on the day. We're 17 pips off the open. We're 43 below the high and 34 off the bottom, and so we're kind of like right in the middle of everything right now. And the market hasn't figured out what it wants to do. But then again, yesterday we had only 50 pips, 51 pips, something like that. And so it's sort of like, that's interesting. And then on Wednesday we had 125, which was a good day. But the Monday and Tuesday were pretty muted as well. So it seems like the pound anyway is starting to compress down in terms of its daily range. I don't know why, but it's doing it. So we have to take note of that and recognize that, here's how I use bias. It's type of thing where if I see that the market is doing that, what it does is it sends off a red flag in my mind of, okay, if we're going to compress down, eventually it's going to bust out of that compression area, and I don't know which way it's going to go, and I don't know how it's going to go, but I do know that the market can't stay this compressed. It just doesn't work that way. The only way the market stays this compressed is if the market goes away. So I don't see that happening anytime soon.
Yeah, so it looks like we want to try and go back to 2600.
Yeah, we're just about 7 pips away from it. So at least on my chart, that down candle actually opened up at 98.7. So really only has to pick up 5-6 pips. You're right, it'll have completed that return bar once again. But if you look at that last run up, Tiro, what you see is you had an entry go and ride that up at 73.3. Then you would have had another entry that you could have gone long at 75.3. Then another entry to go long at 80.1. So you could have, if you stacked on there, by doing it that way, if you would have taken the original entry and only the original entry, you could have been up, 17 pips. But, if you stacked on and you didn't jump out like I do, you could have easily, picked up 17 and, another 10, and the point being that you could have easily picked up, 20 or 30 pips. It's nice when it does that, but that's the advantage of having a bias of where it's going to go, and you take the indicator, triggers that are present itself. That's the advantage of it. I don't get that opportunity, because if I was trading that, all I would have gotten is maybe somewhere between 6 and 10 pips, whereas somebody else could have walked away, like I said, 25 or 30 pips.
Right. So, fellow traders, the fastest 15 minutes in trading is just about up, but that's something you need to take a look at. Are you trading with a bias, or are you trading without a bias and just doing what the indicators tell you? Either way can be profitable, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.